Hello everyone and welcome to the Cryptocurrency News Channel. This is going to be the TAFA and chart analysis for January 11th, 2022. And we're actually getting very good vibes today that we actually did go past 43,000 for a little while at least. So there's slightly more signs of a rebound. One, because we didn't dip past the 39.5 mark that we did yesterday, and two, because we did actually go significantly above 42.5 and we actually went to the 43. We're just about $500 away from that first plateau I actually mentioned right here. And that would signal like the first sign that we're actually having a rebound. Of course, I want a stronger signal above 47,500, which is still quite a ways away. But if you actually look at the graph chart, you can see that we are, having a positive trend somewhat, at least from the 8th until now, barring this thing aside. And, obviously, if you take from the very bottom to now, there's obviously an uptrend. But more than that, more than just the lows, the highs are slightly in an uptrend as well, because this is slightly higher than where we were here. This was only about 42,800, and we went up to actually about 43,100. So the highs are getting slightly higher, although they still haven't reached the highs of around January 7th or so, or January 6th, before we had the final dip. If we can get above that final dip state, then maybe we can actually see more of a rebound. Obviously, the big goal is to actually get above 47,500, which would be where we were, I believe, around New Year's Day. So if we can get around to New Year's late December, which is like a big step up, 48,000, then we could actually see like the bottom of this bowl actually forming around Christmas and New Year, and we could actually be going up, for at least some of January, and maybe really going up starting in February. So that's really what we're hoping for right now. That's really, really what we're hoping for right now. We're really hoping for, up here. We're really hoping for up here by the 15th or 17th. And if we can actually get to about 48,000, 49,000 by the 17th, or maybe even by the 19th, let's just say 47,000 by the 19th, that could actually breach a critical point, and we could definitely be going up. Once again, let me remind you, on the 6-month graph, we are still positive. Remember, like, this little dip is still lesser than this little dip. This little dip here, if you actually compare the two, this little dip here, yes, it's about the same as what we had here in September, but really it lasted for a little bit shorter, and it does look a lot like this pattern, except in a more compacted version of this pattern. Even before this dip, we had this spindle here, but we had this longer spindle actually right here. So what we're actually looking at is hopefully a recovery from here. And on the 6-month, obviously, if you take bottom to bottom, we are still positive, and obviously, over here, we are still positive as well. This can just be seen as a kind of like a shorter lull period, and you would actually have to look at the yearly to see the full picture here, whereas we have a rise from January of last year to April of last year, and then coming down until July of last year, then from July of last year until November, and then coming down right now. So hopefully we can actually get this started in February again and go up much, much higher, maybe to around 85,000 or so, maybe even passing 100K. So right now the volume seems to be recovering. The volume's not really recovering, but hopefully it'll actually get a little bit stronger going into February, especially like after the CPI report. We'll actually see what happens then. And I think everyone's kind of like waiting for those numbers to come out to see how much confidence consumers actually have in the market right now. But right now, over the last day or so, we've actually been getting a little bit more bullish, because we're getting closer and closer where some of the numbers actually flip over, and we're seeing like higher highs since about 5-6 days ago. So if you actually look at it that way, yes, we are getting slightly more bullish, and hopefully this was the actual trough. We don't really know. We could go down even further, back down to 35,000 or so. We'll be looking for that as well. But Generally, it's very good that we've actually broke through 43,000, although it's still not a significant breakthrough until we really reach about 47, 48,000. That's the level that I would feel better about buying in on if you're really looking for non like super long-term trading, which I mean by like 6 months or a year. If you're looking for 6 months or a year, it's probably fine right now. But if you're looking for a shorter term, I wouldn't be comfortable until about 47, 48,000. At least we get up to this leg, meaning that like the bottom of the bathtub or the bottom of the crater, the hole, as you will, in fishing, has actually been passed. So that is what we have right now. As for the technicals, they are still all pretty negative. The commodity channel index is no longer oversold on the daily though, so everything is actually just neutral. It's not oversold, it's not overbought. It's still closer to oversold than overbought. The average directional index is getting a little stronger as everything is actually growing neutral. So right now, according to the oscillators, is very much indeterminate in terms of like which way the market is actually going. Now, on the moving averages, we're getting closer to the 10 EMA and the 10 SMA being around where BTC is. And I suspect earlier today we were around that range, but then we dipped right under. The 50 EMA is still under the 200 EMA, so that death cross still stands, but a couple more days and we'll actually be across that, and then like we'll form an immediate golden cross right afterwards, which would honestly be kind of weird, but it happens all the time because the death cross is generally the death cross honestly is more of a lagging indicator these days than anything else. So on the daily, things are very, very indeterminate. Moving averages wise, yes, you're seeing all these sells, but we are getting a little bit stronger. So it's very hard to determine what's actually going on. Oscillators wise, we're pretty much neutral. On the weekly graph, what you see right here is the commodity channel index is still oversold. So that's a pretty good buy signal. The average directional index is slightly stronger, but for the weekly, it's still very, very weak. The stochastic is actually oversold, and the RSI is neutral. The awesome oscillator actually has gone into the negative, so that's a sell. So on that, I would say it's pretty much neutral because the awesome is telling you to sell, but I would think the commodity channel index and also the stochastic is actually telling you to buy. So it's mixed. So I would say on the weekly, it's probably neutral right now. There's no way I know if it's going to drop down to 35 or go up to 46. My bet's on the 46, but I'm always generally pretty optimistic, so that doesn't really count for all that much. On the moving averages, we're still very, very far away from the 10 and the 20. And like I said, we'd have to get to about 48,000 for the moving average on the weekly to be even close. So that's why 48,000 is actually such a important barrier. The 10-week EMA would also pretty much switch to positive in the upper 48,000s area, which is where I hope we'll be on the 19th. So that's it for the weekly. On the monthly, obviously the 10-month is negative. And, once again, if we're at the 48,000 area, like those would both turn positive as well. Monthly, all the indicators are pretty much neutral, and there's really no buy or sell in the indicators. Obviously, if you're buying for more than a couple of months out, the indicator is still buy. But I really only look at the 10-month, and that's still sell right now. But I'll be looking very, very carefully at what happens from here until the 19th to see if we can get above that $48,000 marker. So that's it right now. The big thing is there will be a cryptocurrency report released by the Fed in the coming weeks. I don't know how many weeks, but he just said in the coming weeks. And Jerome Powell's probably going to get reconfirmed. And the main thing is the CPI report is actually coming out soon. That's the Consumer Price Index. And that actually will be watched by a lot of people to see how inflation is and all that stuff. So if inflation is lower than people actually mentally expect, I expect the market to get a boost. If it's higher, I expect the market to slump. So Bitcoin will probably follow. The CPI is going to be a very important psychological thing. Now, on a logical basis, if inflation is high, that should actually help Bitcoin. But since Bitcoin's still looked at as a market asset, and if the market goes down, Bitcoin will actually go down too. So it's not quite a hedge for inflation, at least not quite yet. So we're going to have to hope that the CPI number looks pretty good if you want any kind of short-term gains. Because if that CPI number is bad, you're probably not looking at any short-term gains, and you're going to be looking at least a month or two out because people are going to be fearful if that actually happens. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button, and I will see you guys later.